When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Welcome back to Bloomberg Markets Europe. We are 30 minutes away from the start of cash equities trading for this Wednesday morning. Here are your top stories. Pedal to the floor. Richmond Fed President Thomas Parkin says rates should be raised as fast as possible as Jay Powell prepares to testify in the Senate. Stocks turn red on recession fears. Oil follows equities. Crude drops with economic concerns in focus. President Biden gears up for showdown talks with the oil industry this week. And UK inflation hits a new 40-year high of 9.1% as food and energy prices continue to surge. Welcome back to the programme, everybody. Welcome to Bloomberg TV. Let's have a look at where we are on the futures picture then. Futures suggesting a little bit of an unwind of some of the gains of yesterday. We were up by more than 2% on the major indexes over in the US in yesterday's session. European equity markets also did pretty well, despite all the warnings we were hearing about how likely we are to go into a recession. A lot of those coming through from the Qatar Economic Forum, where we certainly did hear a lot of voices talking quite gloomily about the prospects for the global economy. It is the final day of the Qatar Economic Forum, bringing together the leaders in politics and business to tackle some of the world's most pressing challenges. Let's try and do that now through the lens, importantly, of the Middle East. Bloomberg's Simone Foxman joins us now at the event with a guest. Simone.
Anna, hi. Yes, I do. Joining me now is Ali bin Ahmed Al Kuwari, Qatar's finance minister. And Excellency, you're in the position that pretty much every finance minister wants to be in. You have high oil prices, which means you have a lot of energy revenue coming in. I mean, look, frankly, how much is Qatar benefiting from what's happening now in Europe from the war in Ukraine?
Well, I mean, high oil prices is good news, of course, for any finance minister, and I mean, for us, we don't look at it this way. We look at it like we have a very disciplined, fiscal policy plan, a medium-term plan for the country, and this is based in a long-term planning and spending, and we are very disciplined about our spending and our fiscal reforms. So we're not changing our plans as a result of this high oil prices. And we should not forget, 2 years ago we almost had negative oil prices, so it's not far away, and so we should always remember this. So we are sticking to our plans, right. We are sticking to our fiscal policies, and we look at it like this is something we need to use surplus to enhance our reserves and enhance our investments.
Are you changing where the money goes in terms of the government? Is more going to QIA in this environment, is more going into infrastructure or social policies?
We have a fixed, as I said, fiscal policy, and the fiscal policy itself has a certain formula, decides how much it goes to pay debt, how much it goes to enhance the reserves of Qatar Central Bank, and how much it goes to QIA. So, and we are sticking to that formula, regardless.
No big changes.
Yes.
The other event on the horizon is the World Cup later this year. Last year, I asked the head of the local organizing committee, how much money do you expect to bring in from this? He said at $20 billion then. Has that number changed? Do you think that's feasible?
Yes. Well, I don't have the exact number, and I cannot, predict, the exact number. But definitely, the World Cup will enhance, the Qatar economy. It will add a huge surplus to the economy for during the hosting. But we should not forget, this is only a 1 month event, so it's something like. But ourselves, the most important thing for Qatar is we deliver a good job in the World Cup and to do an excellent job, not a good job, but and also to build the Qatari brand and to benefit from the Qatari brand during this tournament, because the benefit we're going to get after the World Cup, I think what matters, because this is part of our economic diversification and building of the Qatari brand, where we can benefit, and the many sectors can benefit from the World Cup reputation, the good World Cup reputation we're going to enjoy.
Well, I mean, would this be an opportunity for you to introduce a value-added tax? That's something that's long been talked about, because I expect you probably would make a lot of revenue from having fans here.
Yes. Well, tax reforms is part of our plans. We're looking to that taxation, policies here and what we can do, and diversification of revenues is in our plan. Of course, this is also goes in line with what I was saying earlier about the fiscal policy framework. And we will look to the right time, to apply such taxes. We have to be very careful. Don't forget today there is inflationary pressure, going on, in the world, and Qatar is not isolated from that inflationary pressure. So we will have to really select the right time, because sometimes when you apply taxes in such inflation cycle, the results are not.
So essentially, what you're saying is now is not necessarily the right time.
Yes,
the next 6 months, not the right time.
We'll have to assess the right time for it.
Okay. There's been a lot of real estate, a lot of hospitality built, and there isn't a massive population here, just 2.8 million people. Is there any way you can avoid a real estate slump?
Yeah. Well, okay. Real estate business goes up and down. We know that. But what's going to happen? I think we have to look to the Qatar national vision and diversification plans for Qatar. Qatar embarking in a huge diversification plan, and we should move away. What we have done in the past for the last 10 years. We spent so much in the infrastructure, in the construction sector, and they drove the economic growth. The way we see it for the next 10 years, we're going to be seeing the priority sectors, of the economy, moving in, like, investing in the financial sector, the fintechs, in the innovation, technology, and food hub, logistics, and Qatar has a great position to apply this position. So we're going to see a huge shift, in the economy from.
And that would bring in more people. Ultimately,
Absolutely.
That's the hope. I want to shift gears. Last question here. You've invested money or you've talked about investing money in Egypt as they go through their own inflation crisis, high energy prices, high food prices. Does Qatar and does the Gulf generally have a responsibility to put money into MENA economies in order to prevent them from collapsing essentially under the stress of the economic situation right now?
Okay. Of course, Qatar has been a major investor in Egypt, and this has been going for many years. We enjoy an excellent relationship with Egypt.
Now,
Yes, these things comes and go, but always brothers. They've been brothers, for a long time. And the way we look at it, we look to the future, and the future is promising. Egypt is a great economy, is a growing economy, and has many opportunities, as we go along. So when we promise to invest in Egypt, because we believe, in the future of the economies, so we'll continue to do these investments, as and when we see the opportunities, and the sectors there are tremendous. We have done, the financial sector, we have done the real estate, hospitality, and we think, also Egypt still has great potential for investment in the future.
Despite the financial struggles they're having right now.
Yes, this is, in the world, it's international. I think the whole economies are really struggling because of the, the logistics, disruptions and because of the inflation. And Egypt is not isolated from this. But however, we look at it as a great to build in the cooperation, the economic cooperation and the investment cooperation. And we see many opportunities coming along, and we are going to be always tackling these opportunities as we go along.
Excellency, thank you so much for joining us. We're just joined by His Excellency Ali bin Ahmed Al Kuwari, the Finance Minister of the State of Qatar. Anna, back to you.
Simone, thanks very much. Bloomberg Simone Folksman at the Qatar Economic Forum with the Qatari Finance Minister. Our thanks to him as well. Let us get a Bloomberg Business Flash, top corporate stories that we are covering here at Bloomberg this morning. Here's Laura.
Thanks, Anna. Shares in Germany's buyer crumbled after the US Supreme Court rejected a multi-billion-dollar appeal from the company that it should be shielded from legal claims that its Roundup weed killer causes cancer. The justices left intact a $25 million award to a Californian man who said decades of exposure to Roundup caused his lymphoma. A unit of Glencore has pleaded guilty in a London court after the UK's Serious Fraud Office found the company paid more than $28 million in bribes to 5 African countries. The Swiss commodity giant said last month it expects to pay some $1.5 billion to settle bribery probes in the US, UK and Brazil. The penalty in the UK has yet to be finalised. Volvo's Chinese owner is going public via a blank cheque merger with a special purpose acquisition company, Gores Guggenheim. The SPAC says it expects to close the deal on Thursday, with the Polestar stock to start trading Friday under the symbol PSNY. The transaction should raise at least $850 million to help fund future models. That's your Bloomberg Business Flash. Anna.
Laura, thanks very much. Laura Wright here in London with your Business Flash update. Coming up, we will talk about the UK. The pound extends its decline against the US dollar as UK inflation reaches a new 40-year high. We look at that CPI data next. This is Bloomberg.
Everyone you meet in Port Harcourt has stories about what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
The markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today.
It's going to be short-term.
Bloomberg Markets, The Close. Weekdays on Bloomberg.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to Bloomberg Markets Europe. 18 minutes until the start of cash equities trading, and futures are pointing lower after the gains of yesterday. Let us get to the UK economic story. Data out earlier this hour saw UK inflation rise to a fresh 40-year high in the year to May after broad increases in prices from electricity to food and beverages. The rate accelerated to 9.1% from 9% earlier, and that 9.1% really high, but in line with expectations. Let's bring in Bloomberg Economics chief European economist Jamie Rush, who can talk us through what he made of the data. Tell us about the inflation story here in the UK then, Jamie, why it is as high as it is. And I think there are a lot of people saying this hasn't peaked yet because of the structure of energy caps.
Yeah, that's right. So I think when the Bank of England looks at the numbers today, they're going to be focusing on the sort of the breadth of inflation pressure in the basket. So we see energy, food, all that's going up as you know, as we all know. But we're also seeing this kind of increase in services price inflation, which is actually 4.9%, and that's well above the kind of 3% historical average. So that's what's going to concern the bank now. What they're going to worry about next is, as you say, the change in regulated prices in October. That's going to take inflation above 10%, probably 10.5%, maybe even 11%, as the Bank of England thinks. What are they worried about? They're worried that high inflation is going to combine or interact with a very tight labour market to make it even more persistent. And we're hearing a lot more sort of alarming noises out of the Bank of England. We heard Hugh Pill yesterday, Catherine Mann, both saying they may need to do, may need to do more to keep inflation in check.
Yeah, and so what is the expectation from here around the Bank of England? I think the market is pricing in a 3% base rate by year end, which is 175 basis points from here. And given they've started with this 25, 25, 25 kind of approach, that leaves a lot still to do in the meetings that remain.
That's right. I mean, I think, personally, I think the market is probably a bit ahead of itself on the UK. We're seeing a lot of pressure from the Fed, who are obviously doing monster hikes to tackle what is a much more severe problem on that side of the Atlantic. And I think people are starting to view the UK in a similar sort of light, and I think that's probably a bit of a step too far. The UK sits somewhere between the rest of Europe, where inflation pressure is quite significantly weaker than in the US, and the US, where things are just going gangbusters.
Jamie, thanks very much. Thanks to Bloomberg Economics Chief European economist Jamie Rush for the perspective on that growing base of inflationary pressures in the UK, but also the international comparisons. Useful conversation to have. Let's return to the Qatar Economic Forum and Bloomberg's Simone Foxman with another guest. Simone.
Hi, yes, joining me now is Nasser Al Khater, the CEO of FIFA World Cup Qatar 2022. That's the main local organizing committee for the event. So we're very excited for this event to happen. Can you give us your latest number on the number of people you expect to come to this country for the event?
We've estimated between 1 and 1.5 million in the past, and it looks like we'll be hitting the 1.2 million mark. So our estimates are correct.
How many people at one time, do you think?
We're looking at between 150 and 170 people at peak.
Which is, I guess, the end of the group stage, right?
Which is in the middle of the group stage, actually.
Oh, fantastic. Yeah. That'll be a time to get a lot of people from a lot of countries together. You know, I want to talk about the legacy of the World Cup, because that's been a lot in focus for investors, as well as ESG concerns, increasingly part of their investment decisions. Are you hearing from folks about what needs to be done in the remaining 5 months up to the tournament around things like migrant worker rights, expectations for social policies, particularly for LGBTQ plus people? What are you hearing from investors and corporations?
When we speak about legacy of the World Cup, I mean, everybody usually thinks about the stadiums and what you're going to do with the stadiums. Well, for us, it's been underpinned by the national vision, which really focuses on 4 pillars: human, social, economic, and environmental. And we have made sure that we touch upon each one of those pillars. So if you look at the human and social side, obviously workers' welfare comes front of mind. And there's been a lot of work, a lot of legislation that's been put in place, a lot of standards that have become enshrined in this legislation: minimum wage, working hours, the right to transfer from job to job. These things which seem basic, have been in the region, not basic things that now have been put in place, and Qatar has become a trailblazer in this.
Is there fatigue among the population,
yes.
though, for new reforms going forward? So it'd be hard to expect, essentially, business community to continue pushing at this point.
No, I mean, the fatigue is really readers' fatigue, I think. It's not about the actual legislation and the actual progress, but I think people having to hear about it in the media for so long has created readers' fatigue.
Can you put a number? We had $20 billion as sort of our going number on economic impact for World Cup. Is that still the right number to be using? And then when you look at the region and in the shuttle flights between the various countries in the region, do you have a sense of how large that's going to be as well?
I mean, you've seen the number of flights from the region. There are approximately 100 flights a day. So, I mean, this will be reassessed also when we see the number of tickets from the region and which countries in the region. And it's flexible. We can tweak it depending on the tickets, depending on the matches. In terms of the economic impact, we're looking at between 16 and 17 billion right now.
16, 17 billion. Great new number to get the latest expectation. In terms of accommodation, having people stay here, there's been a lot of concerns that there's not going to be enough rooms. What do you say to fans who are kind of looking at the options on your website and saying, I don't know, that looks expensive or not what I want to stay on now? Is there going to be more down the pipeline?
There's more hotel rooms that are going to be down the pipeline. I encourage fans to look at the official accommodation website of the World Cup. People are going to some of the typical travel websites. Obviously, that's where they're going to, but there is a specific World Cup accommodation website that we encourage people to go to. There's accommodation for the different groups, with different values. There will be more hotels as time goes by made available to fans as well.
Okay, so we know, final question here, we know the stadiums are ready. There's road work going on. We know the port's been upgraded, the airport's been upgraded and everything like that. What to your mind is not ready at this moment?
Everything that needs to be ready right now is ready. Like you said, some of the road infrastructure needs to be tweaked, but we're not worried about that. The Public Works Authority, they work very quickly and they will be done by September.
Okay, but what keeps you up at night, I guess?
No, listen, obviously the fan experience is basically the icing on the cake that we need to get right. There's a lot of plans in place. There's going to be, it's the summer months right now, so we're going to start working on it.
Specifically though, what specific
There will be a lot of fan zones. There will be a lot of entertainment in the country, and obviously there's beaches. Everybody wants to be at a beach in November and December when they live in the whether it's in the North Europe, West Europe, North America. So expect a lot of people on the beaches.
So getting that fan experience, the final piece of the puzzle. Nasser Al Khater, CEO of FIFA World Cup Qatar 2022. A pleasure to get your sense of what is next and what's coming in the pipeline for Qatar. Anna.
Simone, thanks very much. Really interesting conversation. Bloomberg's Simone Volksman at the Qatar Economic Forum, focused on the football, the economy and some of the cultural issues that no doubt will surround Qatar 2022. Let me just get to oil prices. We heard from the Qatari oil minister about how high energy prices were obviously a good thing for a finance minister in a country that relies on energy broadly. This is what we see, though, on oil prices this morning. We are down by more than 5% on NYMEX, down by just 4.6% on Brent. Down 11% since Friday. So during Friday's session, we saw quite a lot of selling. We saw a little bit of respite from that yesterday. But there does seem to be a sense that concerns about recession, concerns about the global economy, maybe sticking to commodities in a little greater than they did previously. The commodity space cooling pretty fast, according to our colleagues on the Markets Live blog. Now, coming up, we will look at your stocks to watch, including Carlsberg, as the company's CFO decides to resign. That is next. This is Bloomberg.
Oil prices are surging.
The world can be a noisy place.
Stock prices are set to soar.
But what if under all the noise was opportunity? Would you hear it? Would you see it? And if you did, would you take action? Join more than 3 million users in over 100 countries and be empowered with Capital.com.
We are the Lions. Strong in performance, independent in mind.
Equip yourself with everything you need to know the key economics, earnings, and events set to move the markets across the Asia Pacific and around the world. Every Monday, we bring you Bloomberg Week Ahead from our studios in New York and Sydney. Get a head start on your investment decisions driven by Bloomberg's exclusive data and analysis. That's Bloomberg Week Ahead on Daybreak Australia.
The Week Ahead, brought to you by IC Markets.
When the market feels toppy, investors may want to switch to low PE stocks with rising earnings. They're hard to find in the US, but not in many other markets. But you can't compare and buy stocks trading in different currencies, right? You can now, with Interactive Brokers Global Analyst.
Interactive Brokers invest globally in stocks, options, futures, currencies, bonds, and funds from a single integrated account.
Welcome back to Bloomberg Markets Europe. We still have 7 minutes until the start of cash equities trading for this Wednesday morning, and futures suggest a little bit of a pullback. US futures also a little weaker. Let's get to our stocks to watch, and we are joined now by Danny Berger to take us through the latest. Danny, good morning. Let's start with the beer industry.
Right, so Carlsberg announcing this morning that their CFO is stepping down. A bit of a surprise to the market. The CFO there saying that he is going to join a different private equity-backed business, not saying which one it is, but did say it was in a different industry, so perhaps no competition issues there. Carlsberg says that they're going to start the CFO search. They'll announce the next person in due time, is what they say. But the CFO, for now, staying on at least as long as the end of this year to help that transition period.
JD Sports, specialty apparel stores of a sporting nature. We have heard from them this morning.
Yeah, they expect another record profit again this quarter. And it's pretty remarkable for JD Sports, just given the upheaval that they've had. Of course, not to mention some of the supply chain issues, but just as the company generally, they are coping with the recent exit of their chair and CEO. They're also splitting those two positions and some governance upheavals, also having some regulatory issues to deal with as well. So JD Sports still, again, searching for the CEO and chair. They have an interim one right now, but still, despite all that, Anna, expect really strong numbers from them.
And then to Switzerland, and what we're hearing from Interroll, which makes, amongst other things, conveyor rollers.
Yeah, they're really interesting because if you're worried about supply chains, I mean, they kind of are the supply chain, or at least they're necessary for it. If they make these storage and, rollers, those sorts of things necessary. So they had expected that they'd normalize out in this first half of 2022. However, the COVID issues are still lingering around, especially supply chains in China. They're also having issues getting materials. So all of this means that they expect this first half of the year to be worse than last half of the year. So again, their hopes of recovery not quite playing out, Anna.
Danny, thanks very much. Bloomberg's Danny Berger with the latest on stocks to watch. We'll keep an eye on the banking sector as well here in Europe. Credit Agricole coming out with some new targets for their business, talking about net income to rise above 6 billion in 2025. We'll keep an eye on the banks. We'll obviously also keep an eye on anything to do with the energy space and commodities more broadly. Commodities and energy taking note of conversations around recession and responding to the downside. This is Bloomberg.
Companies need to think about how they normalize Blackness, and they normalize the Black aesthetic and what it really means to be inclusive. And that means to recognize and appreciate and respect and celebrate all aspects of culture and different cultures. And so it's critically important that we recognize that this is an issue, just as my sisters have said, and make sure that we recognize how that issue shows up in the workplace and how we can be advocates and allies in action to ensure that no person, no Black person in this country feels marginalized or disrespected or diminished in any way because of their hair or their race.
So the challenge is not everyone understands that race-based hair discrimination is a reality. And so we find ourselves constantly educating people, including lawmakers, to ensure that they understand that hair discrimination is racial discrimination. And so we are working collaboratively, the four of us championing this work together, along with the Crown Coalition, to ensure that race-based hair discrimination is outlawed nationwide.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project. Initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Welcome to the European market open. A minute to go until the start of cash equity trading. I'm Tom McKenzie in London with Francine Lacqua in Doha. And here are your top stories as fast as possible. Richmond Fed President Thomas Barkin says rates should be raised rapidly as Jay Powell prepares to testify in the Senate. The overnight stock rally turns red in Asia. Oil follows equities. Crude drops with economic concerns in focus. President Biden gears up for showdown talks with industry executives. And UK inflation hits a new 40-year high of 9.1% as food and energy prices surge. The pound slips against most major currencies. Right, that market rally didn't last long, did it? The futures pointing to downside. If the futures come to pass, then you will see a wipeout of the gains that we've seen across the European equities, about 1.3% Monday and Tuesday. The futures pointing to losses now of 1.4%. Those recession concerns articulated by the likes of Morgan Stanley, Goldman Sachs saying there's potential further downside, particularly for US equities. Of course, we face up to the risks of recession. And the IEA head speaking to the Financial Times saying that Europe must prepare for a potential full cut of Russian gas later this year. The FTSE 100 down by almost 1%. Keep an eye on what's happening in commodities. There is pressure across iron ore, across copper, and of course oil. We'll break that out for you shortly. The commodity space certainly feeling the pain in the session today. The CAC Hunt down 1.4%. The politics still at play there as parties work on coalition plans. The Spanish IBEX down 85 points. Let's switch it over and see how things are playing out then. Of course, it was a solid day over on Wall Street, but handoff was dropped in Asia. Concerns there about what's happening with COVID-0, but it's really recession front and centre globally that is front of mind for investors. The S&P futures looking at losses of 1.2%. The 10-year that is bid this morning, 3.22 is the yield you're getting in the 10-year. You're looking at moves lower by 5 basis points. The pound, 122. So further pressure on the pound, on sterling, down 0.5% on the back of that CPI print. Came in line with estimates, but 9.1%. Backward looking for the month of May, and the expectations are you're going to see that move possibly to as much as 11% as energy prices, and that cap is moved higher later this year. Brent, 109. Look at that, a drop of almost 5%, 4.7% Brent. That is linked to those recession concerns. Once again, we continue to keep across the oil space. Credit Agricole, this is one of the corporates in focus for us today, down 2.4%. They're outlining their plans up until 2025 and how they expect to increase revenues to about 6 billion for that year. NatWest and the announcement by the UK government, which holds about 48% of this UK lender, gaining 2.3%. They're going to expand the time frame for selling down their shares by about 12 months until August of next year. Hugo Boss unchanged at this moment, but Fraser has increased their stakes to about 5% in Hugo Boss, German listed, of course, on their views that the management is pretty solid and they're confident in the forward-looking plans for that luxury brand. Right. Francine is on the ground in Doha speaking to policymakers there as well as a number of executives. What is front and centre for you this morning, Francine?
Well, it's definitely recession risks, and when you see recession risks around the world, what it means for this region. Now, we've had plenty of interviews, Tom, from the event so far. Elon Musk, Herbert Diess, Bob Diamond, just to name a few, and there's much more coming up. Today, we'll also speak to the Boeing's chief executive, David Calhoun, Damac Properties founder, Hussein Sajwani, and then a little bit later on, I'll also be hosting a panel with Gianni Infantino, the president of FIFA, as we count down to the Football World Cup here in Qatar. But of course, the underlying concern here in the region is inflation, and because of the proximity also to countries that really depend on the price of wheat, there's a lot of talk about what the GCC countries can do to maybe help some of their neighbors.
Okay, those inflation concerns being outlined then by executives and policymakers on the ground in Doha. We'll have plenty more, of course, from Francine throughout the next few hours. Right, let's get back to the markets then. The overnight stock bounce in the US has rapidly reversed, with equity indexes now deep in the red amid ever louder warnings that Fed tightening may lead to that recession. Here's how guests on Bloomberg TV predict the situation will play out.
A recession is inevitable at some point.
It's almost unavoidable. I got to think that the odds are that there's going to be a recession. Seeing a cooling of the economy is something that we believe is appropriate.
As to whether there is a recession in the near term, I think that is more likely than not.
We're going to have kind of a tough period here.
Our economists, as you've noted, this morning have increased their odds of a recession this year, but really more focused into next year.
If we can stabilize the energy market, I believe when the Fed does their job, we'll have inflation under control.
Inflation's not going to cure itself.
There will be, again, more surprises and more shocks coming from central banks.
I think this inflation is quite bad. It's intransigent. It's not transitory, and the consequence will be a recession.
Okay, voices there telling and giving some sense of what the expectations are around a recession. Let's bring in Sharon Bell now for her views, European equity strategist at Goldman Sachs, joining us. Sharon, what is your now base case when it comes to the question of a recession in Europe, and what is the shape, what is the flavour of that recession, if indeed that is your view, as to where we end up towards the second half of this year, looking into 2023?
Whether it's a recession or not, I mean, whether it's kind of negative, it's still going to be slowing over the next couple of quarters. I mean, you're right, inflation is eating into people's real incomes, interest rates are going up, economies are slowing. We've raised our estimate probability of a recession in the US. I think we now think it's cumulatively about 50% chance, like a flip of a coin over the next couple of years. So I think that all those factors are going to mean a clear downturn in growth.
So, Sharon, and good morning, actually from Doha here in Qatar. What kind of a recession, and can we really avoid an earnings recession, even if the economy just skims through?
So this is a good question, because earnings forecasts haven't really come down. Earnings forecasts are still pretty high. Analysts, if anything, have been upgrading forecasts. You remember the Q1 earnings season was great, actually. And there were a few profit warnings from the retailers in particular. And I guess maybe they're the first ones to feel it. I do think that if you get a recession, even if you get a downturn in growth, you will see earnings come down quite a bit as well. I mean, in Europe, for example, we find that each 1% move in GDP, you get a 10% move in earnings for that. They're super high beta, I guess you could say, to those moves in GDP. So if you've got a 1% contraction in GDP, that would mean a 10% fall in earnings. We're not forecasting that type of contraction, but clearly if you did get that, it would be quite painful for earnings. And then it's going to be probably led a little bit more by the consumer this time, given its inflation. And you've seen that a little bit, as I mentioned, the retail sector is probably the one sector where earnings estimates have been coming down so far this year.
Okay, so that on the question of earnings. Just bringing to your attention, Sharon, and for our viewers as well, a line crossing the terminal right now. The SMI, the Swiss market, falling about 6%. The index is down now 20% from its highs of December, so it is setting itself up for a bear market. Of course, we are already in a bear market when it comes to the S&P 500. Sharon, how do you position then at this point around these risks, and what do you make of the moves that we've seen just in the last few days? Are they kind of the death throes of the end of this, what was previously a bull market, or is it an attempt by investors to get a grip and they're starting to see light at the end of the tunnel?
Yeah, it's everyone wants to know this, don't they? I think, if we're talking about recession hasn't happened yet, and typically bear markets, which you're right, we're in. The S&P is already down 20%. Quite a few of the European indices are down by that much. In dollar terms, they're definitely down by 25, 30%. So a lot of indices already in bear markets. When do bear markets typically trough? They typically reach a low, reach a nadir when you're in the kind of foothills of recession. And we're not quite there yet. We've been talking about the fact that earnings are still being strong, growth is still being good at the moment, but I think it will slow. So it feels to me more like a short-term rally rather than something that's a real sustained turn.
Sharon, what does it take for actually markets to go higher with conviction? I mean, it seems that every day, there's a lot of volatility. What will settle their minds?
I think, in an odd sense, getting that recession might settle the minds. It was interesting listening to your clip of everyone talking about the inevitability of recession or the chances of recession. I think this is increasingly what investors are worried about. So, but I think ultimately, the thing that normally shifts sentiment on markets is policy. We saw that around the time of the pandemic. Markets actually started recovering well before you actually saw a vaccine. It was all to do with the policy response by the central banks. At the moment, policy is actually still in the tightening phase. We're still upping, or generally in the last few months, been upping our interest rate forecasts. Central banks tightening quite aggressively. And I think really we need to get to a point where people believe all that tightening is in the price and they can start to expect eventually, if you get a downturn in growth, central banks turning a little bit and starting to loosen policy. And again, that feels a little way off at the moment.
Yeah, and the Fed's Thomas Barkin, not a voting member at this point, saying that you need to go as fast as possible on rate hikes without endangering financial stability. Just to underscore that point. Sharon Bell, European equity strategist at Goldman Sachs. We'll get more of Sharon's calls and the view as well on UK assets after the break. Talking of which, coming up, the pound extending its decline as UK inflation reaches a new 40-year high. It was almost inevitable, wasn't it? We look at the CPI data next. This is Bloomberg.
Door open.
So this car is actually equipped with level 2 SAE autonomous technology, which means that it's capable of driving on its own under certain limited conditions. So it has LiDAR and sensors and computers on board that calculate the movements and obstacles around it and drives forward. So for safety reasons right now, there is a safety driver sitting in the front seat of the car right now to take over in any kind of situation that the car can't handle on its own. But the eventual goal is to actually have remote drivers handling fleets of these cars. So they would be monitoring, 10, 20 cars and actually stepping in if any of those cars kind of encounter situations they can't handle on their own. And eventually that will actually lead to lower costs for this kind of transportation, according to Nissan, because there won't have to be extra added fees to pay the driver, for example.
Nissan is one of several pressing ahead with autonomous robo-taxi services. The global driverless taxi market is expected to grow from $500 million in 2020 to $11.1 billion by 2027, according to a report by Fortune Business Insights.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Welcome back to the Open. We are 12 minutes into the European trading day this Wednesday morning, and the gains of yesterday already in the rear view mirror. You're seeing losses here in Europe of 1.7%. The future stateside pointing to losses. The Nasdaq futures pointing to losses of close to 2%. Treasuries are bid, and the commodities complex is getting crushed. Let's get back to what's happening in the UK, though. UK inflation rose to a fresh 4-decade high in May after broad increases in the cost of everything from fuel and electricity to food and beverages. The rate accelerated to 9.1%. That was in line with economists' forecasts. While the jump was smaller than seen in recent months, the figures still underline the scale of the inflation crisis facing the UK. Sharon Bell, European equity strategist at Goldman Sachs, is still with us. Sharon, what is the Goldman Sachs prognosis on the UK at this point?
Yeah, I think the UK is probably the closest to being or getting into a recession. We have the next couple of quarters incredibly low growth in the UK, kind of close to zero. And I think that is driven by the concerns that you've just been highlighting, inflation at a 40-year high at the moment. It will probably go higher. This is not we have not reached the tip of the peak of this inflation cycle. I think that will probably be more likely in October when you see the energy cap rise again. So more inflation for the UK, relatively weak growth for the UK. And that's also, of course, we've had quite a few interest rate hikes that will hit people's mortgages, etc. So quite a lot of different factors impacting the UK as well.
Does this CPI print, do you think, force the hand of the BOE to push through an historic 50 basis point hike at the next meeting, Sharon?
Yeah, I mean, we expect them to do 50 basis point hikes. We expect them to do a 50 in the August meeting that they have. We expect a 50 in the September meeting. And you're right, that's an incredibly sharp pace. They had been quite cautious up to now, doing quarter point hikes. And I think the reason for that is the levels of inflation. Also, globally, central banks raising rates pretty fast. We think they'll then slow down a little bit towards the end of the year, because at that point, I think inflation probably will have peaked and start to come down and start to slow.
OK, so brace yourself for 50 basis points. Whether or not that puts a floor under sterling currently at 121 is another question, of course, the impact there on inflation. Sharon, just briefly, when it comes to the FTSE 100, of course, delinked largely from the fundamentals of the UK economy, but something of a hedge in the environment that we see ourselves in today, just down 3% year to date, of course, compared to, what, 22% stateside or 17% in European equities. Do you find an opportunity in UK equities? And if you don't, what else is looking attractive? Where are the value at this point?
Well, I do agree that the UK is kind of delinked. UK big cap FTSE 100 stocks are somewhat delinked from the UK economy. About a quarter of FTSE 100 sales goes to the UK. The rest, 3/4, is global, really. But of course, global economies are weakening at the moment too, which is why even the FTSE 100, not very domestic, but exposed to global issues and has come down a little bit this year. But it's nowhere near a bear market. I think the reason for that is it came into this year at a much lower valuation, much less sensitive to higher interest rates and all those sort of sell-off in the higher growth tech companies. I think the UK's FTSE 100's main vulnerability is if you do get a big sell-off in commodity prices. That's not something we forecast, but if you do, that will be where FTSE 100 is most vulnerable.
OK, the reliance then of UK equities on what happens in commodities and the linkages there. Sharon Bell, European equity strategist at Goldman Sachs. As ever, thank you for this, for your insights this Wednesday morning. OK, let's get the Bloomberg Business Flash now with Laura.
Hi, Tom. Shares in Germany's buyer tumbled after the US Supreme Court rejected a multi-billion-dollar appeal from the company that it should be shielded from legal claims that its Roundup weed killer causes cancer. The justices left intact a $25 million award to a Californian man who said decades of exposure to Roundup caused his lymphoma. Richmond Fed President Thomas Barkin says the Fed should raise rates as fast as it can without causing undue harm to markets or the economy. Barkin does not vote on monetary policy this year, but says he supported the central bank's 75 basis point hike earlier this month. He says the US central bank may need to raise rates beyond neutral and into restrictive territory.
We are in a situation where inflation is high, it's broad-based, it's persistent, and rates are still well below normal. And so I think the spirit is you want to get back to where you want to go as fast as you can without breaking anything.
A unit of Glencore has pleaded guilty in a London court after the UK's Serious Fraud Office found the company paid more than $28 million in bribes to 5 African countries. The Swiss commodity giant said last month it expects to pay some $1.5 billion to settle bribery probes in the US, UK and Brazil. The penalty in the UK has yet to be finalised. That's your Bloomberg Business Flash. Tom.
Laura, thank you. OK, coming up, we will be with Damac Properties founder Hussein Shadwani from the Qatar Economic Forum. We'll get views, of course, on the property sector at a time of, at least globally, stateside and here in the UK, much higher rates, what that means for that sector. Stay with us. This is Bloomberg.
In an ever-changing industry, you have to react and adapt. But some things never change. It's in our name, it's in our values, it's in everything we do. Trade global markets with professional trading conditions, proactive tools and services, progressive technology, prominent industry-leading broker, proficient in every way. FX Pro. Trade like a pro.
We empower those who act. Those who see the correlation between things above and things below the surface. Those who navigate risk by meeting every turn with a heightened awareness of what's possible. Constant assessment. Determine the best position. Catch the perfect wave. CME Group, where risk meets opportunity.
We started off as a financial institution, right? So we're regulated by so many authorities. That was actually an advantage for us moving in because it helped us to create lines of what is actually a family conversation versus what is actually a professional conversation in the workspace. And I think that over time, it's as simple as building a habit. The moment we walk into the door in the office, we owe it to ourselves to actually be professional. I don't take any of what I do for granted. And I always like to think of myself as the underdog. It's about doing genuine work and being passionate about what I do and walking in and giving it my best. In KSK, we have a culture that we like to innovate and learn very, very quickly. I believe that whether we fail or we succeed, there's always something to learn.
Bloomberg Generation Next, brought to you by Pictet.
Welcome back to the Open. 20 minutes into the European trading day. The gains of yesterday, well, they didn't last long, did they? It is a pronounced risk-off mood today across equities. You're seeing that reflected in the dollar, in bonds, and certainly in commodities. Currently down 1.6% across your benchmark European stock 600. The futures in the US pointing to losses of between 1.8 and 2%. Right, let's turn to the property sector now as we return to the Qatar Economic Forum. Francine standing by with another guest. Francine.
Right, I'm joined by Hussein Shadwani, the founder of Damac, and I could not be more delighted to speak to you, sir. Thank you so much for joining us. When you look at the recession fears, what everything is talking about inflation, what does it mean for the Dubai property market, which is extremely strong at the moment?
Well, Dubai property market is doing amazingly good. The demand is there. And don't forget, we had 4 years of slowdown. So a lot of supply was also, been kept away. So now there is a huge demand. Dubai has managed the COVID time very well, and the Expo, and the world leaders, the world businessmen, people from all over the world came to Dubai in Expo and realized it's a hidden jewel from all the angles. from the tax, from the safety, security.
Yeah. And so this is people from the region. How many Russian residents, for example, do you have? Do you have a lot of demands?
There are Russian coming, but not to the extent which people talk about it and is there. So I don't think a big number of Russian, but we have demands from, the biggest demand this time has come from Europe, from Germany, from UK, from Scandinavian country, from Romania. We have customers coming from Eastern Europe.
So, talk to me a little bit about your reasoning behind delisting the company. You delisted the company,
yes,
but actually just when the property market was also booming.
No, we planned that in 2019.
Yeah.
And we submitted our application to the government, to ESCA, in February, end of February, beginning of March of 2020. And then our stock prices was 40 fils. But the process took longer. And we bought it at 1.4. So we bought it about, almost 3 times than what it was. But that's fine. We have no regret on that.
No regrets. Do you worry about a recession?
I worry about the recession in Europe. From my readings, that the recession in the US is going to be very mild and going to be very quick. Europe is going to be, could be very hard landing, but it all depends on the war with Ukraine, with Russia, and which direction that war going to go. If a ceasefire happen in the coming few months, and I hope so, then I think they will have a recession, but mild, and will not last very long. If that war goes for longer and gas prices or the supply of gas get interrupted, then they could have a harsh landing.
And what does that mean for property in Dubai?
Fortunate or unfortunate, whatever you call it, property Dubai is benefiting from any crisis around the world. So property prices benefiting Dubai. A lot of people finding Dubai safe haven, coming to invest, coming to live. I know a number of wealthy people from Europe. They're coming, moving their families because they find it tax-wise very attractive, and connectivity is there. And believe it or not, Zoom has made a big difference. Okay, or people can communicate over the Zoom, so they can do their business over the video.
I mean, what's doing really well at the moment is of course, real estate space, but branded with fashion brands. So I think there's something with Cavalli, there are condos that has that luxurious stamp of a well-known fashion brand. How many are you planning to do in terms of these collaborations?
We just launched 7 months ago, our Cavalli Tower, and it was amazing response, and it was sold out within no time. We launched now our product called Safa One, which is by Grozogono, which is a brand we bought, Swiss jewelry brand, and we're planning to expand it. And as a matter of fact, we're looking to partner with jewelry companies in Asia, in USA, and Europe for the Grozogono.
And you'll do more after that?
And we just did Safa 2, which was just last week, and is doing very well. So we see now how things go in October after summer.
Now, your firm also allows actually transactions to be paid in cryptocurrencies.
Yes.
I mean, the volatility in the last couple of weeks must have hurt.
No, when we allow that, people pay in crypto, we sell it immediately, and we don't take the risk of the crypto. We sell it immediately in a matter of 48 hours and take our cash.
So why do you allow crypto?
Because there were a lot of customers who had crypto, remember, a few months ago, and they were making a lot of money, and they wanted to cash out. So they want to buy a real estate and, reduce their crypto exposure.
Okay, very interesting. I mean, I don't know whether you'll curtail that in the future, because even in 48 hours, there's so much volatility, it could actually be more painful to sell at the same price.
No, okay, there is a margin of safety, or there is a margin of profit that as a business you calculate that into your pricing. That's normal.
Okay, thanks so much for joining us. Hussein Sajwani there, the Damac founder. Now we'll have plenty more, of course, from Qatar at the Qatar Economic Forum. We talked to Thomas Norokche, the Chief Executive Officer of Joe and the Juice, on his expansion plans. This is Bloomberg.
Apple fans will likely have to wait a little bit longer than expected to get their hands on Apple's first mixed reality headset to compete with Meta's Oculus. The iPhone maker had planned to reveal the new device as early as this June at WWDC and then release it later this year. But the company has been facing some development challenges related to the device overheating, camera technology, and a new operating system. That means that an intro as early as the end of this year or early next year with a wider consumer release in 2023 is more likely. The headset is planned to have super fast M1 Pro-like chips, immersive audio and speaker technology, and capabilities for media consumption, gaming, and communication. The headset will be pricey, however, and probably cost well north of $1,500. The product will be Apple's first big new bet since the Apple Watch launched 7 years ago, and it should enable an all-new class of applications and a developer ecosystem through an onboard app store. Apple then plans to use WWDC 2023 to engage VR and app developers to write software. The first headset, however, is only the beginning for Apple's ambitions in the space. The company is planning a standalone augmented reality headset as a follow-up later this decade. I'm Mark Gurman. This is Power On.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The two forces that got us from 110, 115 to the 130, 135 range are still in place. We've got a widening interest rate differential. Those forces are likely to stay in place. So as far as I'm concerned, we're in for further yen depreciation towards 150, 160.
Given that we do have some level of inflationary pressure, what change does Japan need most at the moment?
I think Governor Kuroda tells you exactly what you need to look for. He wants to see demand pull inflation. So I am watching like a hawk any data point on domestic travel. If that starts to recover and accelerate, then yes, the Bank of Japan will change its mind.
Welcome back to the Open. 30 minutes into the European trading day, and here are your top stories. As fast as possible, Richmond Fed President Thomas Parkin says rates should be raised rapidly as Jay Powell prepares to testify in the Senate. Stocks tank in the first 30 minutes of European trading. Oil follows equities, crude drops with economic concerns in focus. President Biden gears up for showdown talks with industry executives. And UK inflation